Hey, Open Trades! I want to do a video analysis update on Nokia. Danny Hernandez said a lot of people want to see an update on Nokia. Kind of surprising to see a lot of interest in Nokia, really, because not a lot of action from it, but there are two charts of Nokia. One is an ADR, one is a more familiar, or one is a foreign on a foreign exchange. The other is an ADR. So this is Nokia, the ADR, knock in OK. I think that it does a good job showing the longer term count of Nokia. That this is a large wave 1, an ABC correction wave 2, and a pretty clean subdivision for Nokia here. Within this impulse from this low that began in 2012. So a lot of time going into this base if it really is some type of long-term bottom. Nokia is a member of the telecom sector. It's also a member of the meme stock sector. Oh yes, the meme stocks, that is certainly a sector. We'll see if they can excuse Nokia rallying by Redditors this time. But the meme stocks, I was going to talk about some of these meme stocks in the Nokia video. I elected not to, but Mr. Market can be surprising. If he wants to say Nokia rallies with Palantir and AMC and all those other meme stocks, GameStop and who knows, they were saying American Airlines was a meme stock for a second. Speaking of American Airlines. Anyway, this would be the long-term count of Nokia on the ADR. From a risk-reward perspective, 1, 2, 3, 4, 5 waves up is pretty clean. An ABC correction, and another wave 1 and another wave 2. So with that meme stock aspect, it does kind of give Nokia a little different risk-reward than what's usually being seen in the high beta world. For this high, just breaking it would be 9.79. But what could eventually happen if this nest really did play out to the upside? Well, the count would be that the length of wave 1, place of the wave 2 low, assuming that wave 2 ends, and that's going to be invalidated in the long term, which would be way too far away. For 2.34. There's a short-term invalidation we'll get into, and that kind of more just right invalidation, I believe, is why I got this ADR out. I think I did for this reason. 2.70. Yeah, I mean, both of these long-term invalidations aren't very useful, which is one of the reasons that Nokia has just not been the best setup for me to highlight ever since it broke one of these lows. But in the long term, wave 1, wave 2, another wave 1, and another wave 2 could be unfolding. And I'll talk about some evidence from the rest of the telecom sector that might give credence for this. Within the cycle from this low, there really isn't too clean of a wave count from this low, I'll be honest, but what could, from the daily perspective, they don't always make them super clean. I think it could be something like this. An A, B, C correction unfolding for Nokia. The length of wave A, place of the wave B high. How close are we to that? Not too far away. Not too far away, right around at that. That equal legs target would be just right above 3.30, 3.32. I could measure it to be exact, taking these fibs. And that would give kind of this zone on the daily count, at least, for this ABC correction to end. And then what that would do is it gives a better invalidation. wave 1, ABC wave 2, excuse me, and a wave 3 can begin from this low. That invalidation would then be a little more reasonable of 2.94. Should that ABC correction end, it would open up the larger degree counts. And I do think that in the bigger cycles, wave 1, wave 2, wave 1, wave 2, it would be my bias to say that it'll be found they made Nokia pretty difficult for a pretty good reason. Because per Elliott wave, even a big wave 3 rally, should all those invalidations hold, be hit, taking Nokia up to 10. A shallow wave 4 correction and a wave 5 higher would be the expectation. The length of wave 4, place of the wave 5 high, is where the longer term cycles can come into play. Where'd I put that 5? Anyway. So yeah. This daily low right here, most likely the best invalidation, 2.94. Large wave 1, large wave 2. And then from this low, this meme stock advance can be another wave 1, another wave 2. Wave 3 of wave 3 begins before a shallow wave 4 and a wave 5 higher. 2.94 I think is the best invalidation. I won't get into the ADR, but I will get into Verizon, some of these other telecom names. Pretty clean. Verizon's been seeing a lot of this unusual options activity. Saw a big unusual options reading, about 550% unusual options volume, almost entirely biased to the call side, which is pretty hard to do for Verizon and how liquid and of a large cap stock it is, how big the float is. But anyway, I think in the big picture, it's not just going to be Nokia, wave 1, and ABC wave 2, 1, 2, 3, 4, 5, another wave 1, and another ABC correction wave 2. And just like Nokia, not quite beginning in 2012, but a decade in the making wave 1 and ABC wave 2. So it is a really long-term count, and Verizon pays a much higher and more stable dividend than Nokia, from what I checked, and it could be leading the charge, so to speak. I talked about the unusual options activity on AT&T as well, kind of predicating that a large move could be coming in this sector. I haven't seen Nokia on these screens in a while, but Nokia has been on these implied volatility, low ranking percentile and straddle and strangle screens for a bit. If there were some long-term accumulation campaign taking place with Verizon, with Nokia, with the entire telecom sector, with AT&T, it certainly wouldn't be easy. And well-advertised Nokia probably would be one of the more high beta flyers in the sector. Verizon, who knows, but could be the more stable play in the telecom sector. This ETF XTL, I think, also gives a little bit of evidence from what I was saying. It's a whole ETF full of telecom stocks, and it's got a pretty clean wave count. 1, 2, 3, 4, 5, again from 2012, an ABC correction for wave 2. And then I think from this low, again, a pretty clean subdivision for XTL. 1, 2, 3, 4, and 5. Very much lining up, in my opinion, with Verizon and Nokia, with what I was talking about. 1, 2, 3, 4, 5, wave 1, ABC. It's just a pretty clean count. And they all kind of say a similar picture. So I think one mistake I would be making is if I just went for Nokia for that meme stock beta. But I do think that meme stock beta, as far as the telecom sector goes, There might be other names like Sirius XM or something like that, but that might be one of the more alpha plays in the telecom sector. Global Star and Black Sky Technologies, a little more less established growth names. Maybe they should be the meme stock names instead of Nokia. But anyway, XTL, it's an interesting sector. That's why I was a little surprised, because this is not a sector that I would think would be on the radar of the masses. But and this wave count kind of shows why they wear the retail out, and they scare retail out of a sector like telecom. That's basically a utility sector. It's almost like real estate, even, and real estate itself. American Tower is the biggest holding of a lot of the real estate ETFs. Kind of a similar picture going on. And so, while I think that a lot of these meme coins and a lot of these small cap growth stocks are great, and I'm certainly going to take part in them and collect option premium from them when I can, these are another part of this bull cycle that I think has been a lot more quiet, and telecom hasn't joined it. But this is a pretty clean nest for XTL. 64.09 is going to invalidate that, and it's also going to end that monologue. Maybe a little more fun, and something that I certainly partake in. Disney and DSO, little more fun side of the telecom sector. I know Disney's got its own special stuff, and it's not just the telecom stock, but this Yield Max ETF, as ExxonMobil starts to run away, it reminds me that a lot of the Yield Max underlying holdings are in the growth sector, large cap tech and growth, which, besides, Amazon and, in some ways, some of these other stocks individually, there's not a lot of fundamental backing, so to speak, besides the growth of the products. And what I'm saying is that Disney's maybe more of a value stock, and ExxonMobil is certainly a value stock as far as yield max option premium ETFs go. And so I think by that logic, the dividends are a little safer and more stable. At least that's how I view Disney and ExxonMobil when all those big lists of yield max ETFs came out. So anyway, I own DSO. I'm interested in blending DISO with Disney. I think it's formed a 1, 2, 3, 4, 5 waves up, a large wave 1, an ABC correction that ended at the 61.8% retracement. And then as Disney rounds out the right side of the base, I think the total returns I'm pretty satisfied with. It's about a 17% forward yield, 48% total return, annualized total return, blindly averaging into DISO, the yield max Disney out of the money covered call, synthetic covered call strategy. So I'm impressed with that. I'm interested in this, and I do buy it. And so there's a lot of premium from the telecom sector. There's a lot of dividends from the telecom sector, and Nokia, maybe some beta from the telecom sector as well.